Hello, my YouTube friends from Universal Studios. Got my family and friends in the background. Today we're going to do a video at some point today. Don't worry, I'm still going to talk my usual finance, but I thought it might be more interesting to show Universal Studios than just me. So today I'm going to talk about Nextera Energy Partners and what I still love about it. I'm not as excited here in the $30 range as I was below 30. Oh look, gifts for me. I think it looked cute on me. Here, let me. What do you guys think? Is it my style? Does that fit? However, when I do my analysis, I see its fair value around $42 to $44 a share. And I think when I look at a chart, I can even see it getting back up to $50 a share. Now, again, this is not financial advice. This is just my opinion. I'm just some guy on YouTube, so don't listen to me. You guys need to really do your own research. Anyway, that's my beautiful wife, my son, some friends of ours running around the store like crazy people. Her new bag, a hat we got at Universal in Japan. I think it was in Japan. So the reason I come up with those numbers when I do the analysis is twofold. I take the earnings and I give it about a 14 PE, and then when I run those numbers, it looks like it made $3.07 over the past 12 months. That brings it to a valuation of a little over $44 a share, if I remember correctly. And then, if I give it an 8% yield instead of what it's paying now, that brings it to almost $43 a share. I think both of those analytics are pretty reasonable once people get comfortable that the stock isn't having major problems as to where it could fall. The reason I think it could go back to $50 is when I look at a chart, that's where it really fell rather quickly from all the way down to the lows around $20 a share. Very oftentimes, once stocks start to reverse, they fill in that gap. So I don't think it'll go straight back there, but I see that as a stopping point of where it might get to and then slow down before getting above it. You know, everybody in the gloom and doom world talks about this tough economy. Meanwhile, places seem to be doing just fine. This is like super early in the morning before people really get here, and it's crowded. So now you guys need to do your own research, but take a look at a 5-year candlestick chart, and you'll see how the stock just kind of came down from $50. It has some great volume and some great movement down into the low $20 range before it catches itself, and now it appears to be going back up, which is kind of nice and what I look for when I look at charts. The other thing is I like the analysis I did. I compared it to Enbridge and some other stocks that I would categorize as similar that get, most of them seem to get about a 7% yield right now. And they're actually growing at a smaller pace in terms of what they're hoping to raise their dividends at, whereas Nextera is still hoping to raise it somewhere between 5% and 8% per year going forward, which I think is a good increase in the dividend at a good consistent pace going forward. If they're able to maintain that, which they have already, that's why I envision the stock retesting that $50 range before settling down into the 40s. And if things continue from there, I just expect it to go higher again. All right, a little distracted by Duff Beer and The Simpsons. Love The Simpsons. Oh, I hope you guys don't mind the new format and running around taking pictures of the park. We have a trip planned this summer, and I'll be moving around. So either I'll be doing videos like this, or I can just find a spot somewhere where we're staying at a hotel to kind of sit down and do it similar to how I normally do it. You guys let me know what you like better, and I'll try to accommodate. Unless it's like a 50-50 split, then I don't know what I'll do. So I don't know how many of you have been watching UPS, but UPS has been falling a decent amount, and I think that's because they announced that they're going to be issuing a whole bit new debt, and I think that raises some concern as to why they need to raise the money. They have plenty of cash flow coming in, so maybe they're updating trucks or things like that, but they didn't give a response as to how much they're actually going to raise. The whispers are up to $2.5 billion, but I guess we'll see as we get closer in 10-year and 20-year debt notes. There they go. Now those two got it. The others didn't. Anyway, like I said, still super bullish the market. Very early in the morning, places are still crowded. I know the gloom and doomers talk about rough economy and everything else. It's hard for me to imagine we have some big downturn coming anytime soon. So I would still delineate against the yield trap versus something that just has a good yield because it's out of favor. Those are two different things. And I saw Nextera Energy Partners as a good opportunity to get a great yield because it had some bad news. I see the same thing right now in Pfizer, and I'm sure there's some others out there as well, all that are getting really good yields that simply are just out of favor and not necessarily a yield trap. I would expect Nextera to continue higher. Again, this is not financial advice. This is just my thought on the company. I think the same of Pfizer, which already had great earnings and is beginning to reverse. And I was even looking at Bristol Myers, which I talked about in another video. Now, that doesn't mean I wouldn't still own the companies that I've talked about that are the best of the best. I still want to own those as well. Now, I am going to keep it short. I see my family coming back, so if you haven't already, do me a favor, hit that subscribe button, smash that like button, make sure to make comments.